Okay, I was MIA last Sunday, but you didn't think you could get rid of me that easily, did you? I'm back, baby, and let me tell you. Well, I'm down about 22,000 since my last update, but I'm still back. And last month wasn't all bad. It did happen to rain dividends quite a bit more than last January. Oh, and I have a shiny new, well, used, SUV for hauling the family around. That means my portfolio was technically up since last time, but who's keeping score anyway? Not me. This video is going to be more packed than the typical portfolio update. I have some major channel updates to share, and I launched a new dividend growth fund to compete with SCHD. I'll tell you all about that stuff, and of course, we'll get into the portfolios, value by holding, all new transactions, the dividends received, oh, we'll like that one, a HODL factory update, and an update for the new fund, the Snowball, as well as my future outlook for my investments. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please dogpile on that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. Before we dive in, a quick shout out to my Seeking Alpha Premium link below. If you or a friend are interested in trying Seeking Alpha Premium for free, check it out. And Seeking Alpha is not a sponsor for this channel. In fact, I don't have any sponsors, but I just love it. I use it for my stock and ETF research, my portfolio aggregation, and all the screeners that I run for the HODL Factory, the Snowball, and a lot of other things. Using the link does support the channel, but more importantly, it will save you money. Wait for and snipe those good deals when they come around. You know what time it is. Let's grow. Channel changes and welcoming the Snowball. I have some good news and some bad news this month. And let's knock out the bad first. I decided to reduce the number of videos I drop on the channel, at least for a while. The passion for helping people reach financial freedom has only increased as this great community has grown. It simply came down to time management. And don't get me wrong, I'm not in this thing to min-max my income. But at the same time, when I'm spending 12 to 15 hours a week to net $500 a month, my time is better spent with my 2 and 4-year-old kids and my wife. And I wouldn't be surprised if I get back to 1 video a week, or maybe even more than that once those kids go to school. Enough of all that, how about the good news? I decided to kick off a new dividend growth portfolio that I called the Snowball. And don't worry, the HODL Factory that I run with Hutch and SCHD aren't going anywhere. This new fund aims to outperform SCHD over the long term in total return and in dividend growth, while also having a solid dividend yield. It currently sits at 2.89%. The goal with this one, assuming it performs as expected, is to load the boat when my wife and I fully retire in 5 to 10 years. You can see the full holding details as well as some pretty cool, in my opinion, but I'm a nerd, key metrics with this free spreadsheet that I share on the channel by using the link in the description below. I would love to dive deeper right now, but we have a lot to cover in this one. So let's keep this thing moving. Portfolio overview. Before we dive in, just so I don't have to say this every section, every spreadsheet that you see in my videos, at least most of them, are available for free in the description below in Google Sheets or Excel format that you can save a copy and make it your own. Or you could just follow along with my journey, because by default it's my stuff, and make fun of me as my portfolio falls over time. Let's hop over to my accounts now, and then we'll dive into my portfolio tracking spreadsheet that brings everything together for my overall target allocations. We're going to start out here in E-Trade, which is where my wife and I hold the majority of our investments. You can see sorted by value. SCHD is our biggest holding here, and we have 14,895 shares at an average price paid, split adjusted of course, of $24.65, and that's a value of $410,500. And you can see we have some good total gains, and this is only the price gains. This does not include dividends. And VGT, still have my 500 shares at $246.50 a share. And we're up 187,000 on this one, and it's worth 310.5. And then we have JEPQ, which is all in Roth IRAs. Now, this is just my Roth IRA. I have not done the power of attorney yet. My wife and I plan to do it this coming week. So I'm sitting here on Sunday, February 9th, by the way. Seeking Alpha will end up matching the spreadsheet at the end. Really, we have 1,800 and something shares when we add my wife's Roth IRA, and we'll get there. So mine are 91.5K. And then we have our money market for cash, and we have other cash as well. We'll cover that. But out here we have 90,000 plus just under 10,000 in the high yield savings account for E-Trade. This is just more tradable, so I don't have to take the day to sell a money market. I usually leave a buffer in here to sprinkle into the market at any time, and then I'll backfill it with the money market. And then my last holding, this is all my nephew's account down here. My last holding is IBIT, and we still have 1,050 shares, average cost of 36 bucks, and it's up 51% or 19,000. Total value of $57,000. Okay, now I'm out here on Seeking Alpha, which is where I do all my aggregation, like I mentioned earlier, along with my screeners, and lots of my key metrics and spreadsheets are updated from the Seeking Alpha feed. I just love it out here. But you can see E-Trade right here. When I hit the down arrow, let's sort by value. So here's the SCHD is identical to E-Trade. Same with the VGT, the IBIT, and the money market is the money market value plus the high interest E-Trade cash. I just put it as one figure, it's easier. And now JFT, you'll notice we have 1,846 shares worth 105.5K. So the story here is that we maxed a Roth IRA that was a new one in E-Trade under my wife's name in December for 2024 and also in January for 2025. So she's purchased about $14,000 worth of JetQ in her Roth IRA. And when you combine them together, they're here. And soon we're going to see this number in E-Trade. I just need to complete the power of attorney. So everything's under my E-Trade account. But this is the same stuff out there outside of that exception. And then moving along, we have the wife's 401k, which is 100% VU, and it right now is worth 443.8K. This is the one we're now maxing every year. We have the last few years. Of course, we couldn't when we were up and comers, combining for $94,000 of total salary with about $100,000 worth of debt. This was a slow ramp up, but maxing it has made a big difference, and the value's getting up there. And you can see we've got in at a good price. We just trickled in over time. And then her HSA is VUG. It's actually VIGIX, but it's the exact same as VUG. I use this to track it real time because I like ETFs better. It's at 38.6K. And then the HODL factory is linked directly to M1 Finance, and the Snowball, the new guy, I'll show you some holdings here. It's linked directly to Fidelity. We won't go over them all in detail here. I'll just do a quick scroll. We're going to show this in more detail in Snowball Analytics. But we have 20 different holdings, and this is held, and I'll show you sometime, in Fidelity. So we have E-Trade, M1 Finance, Fidelity, companies. And then other cash is cash that's not in the money market, but most of it makes us interest, and I won't get into exactly where all of it is. We like to be diversified a little bit, but that's about 46,000. So you can see the total number is 1,534,000, and keep that in your mind as we magically switch out to my portfolio tracking spreadsheet. And you might notice that I lied. I'm a complete fraud. This one's $3 cheaper. What I do is I just round everything down no matter what to the nearest dollar. I don't add the cents out here. So you can see, work, S&P 500 VU. This is all the stuff we just saw. So I put in these inputs here, and then the spreadsheet does the rest of the magic. So you can see right here, our total holdings is that 1.534 million. And now you can't see the tabs down here, but I'm going to the allocations tab. So this is where we start to work our decisions each week or each month. We have by individual holding, we have our different tickers here and the amount. So cash just crunches, other cash, high interest savings at E-Trade, money market. We have a total of $146,000 of cash. And you can see that's 9.5% of our holdings. I like to keep that at 10. We're a little light right now. And then JEPQ, IBIT, VUG, and stocks. Now I will say, we come over here to our decision-making model. I like to keep growth, S&P 500, and value at about a third each compared to each other. Not counting this stuff, we'll get there. But you can see we're a little growth heavy, and we have been for a while. So we've been buying value, buying up to the target allocation. That's been SCHD. Now I will say, you'll notice that stocks are the HODL factory. The PE ratio with them historically is right about VU's. It's a little below usually. So I didn't want to put it as the S&P 500, but it's not necessarily growth or value. It's a hybrid. So it has its own category. This is the HODL is 1.2% of my overall portfolio. Whereas the new Fidelity stocks, they're also in this stocks figure here at 21,000. And I'm sorry, I should have specified. You can see the stocks here is only 18,900. That's the HODL Factory, its own category. And the new one, it's only a couple thousand right now, I gotta build it up, is the Snowball. It rolls into the value category along with SCHD. So you'll see this isn't exactly SCHD's amount. The difference is the Snowball. And I'll maybe find a cleaner way to add that here. Maybe I'll make it a different kind of stocks. This is all pretty new, but its PE ratio is less than SCHD. So it is truly value dividend growth. That's why I separate them here. And right now I'm really focusing on growing the Snowball compared to SCHD with my extra dollars, but they ultimately go into the same pot. And I mentioned cash, we're a little cash poor. We bought that car recently, and I'll have a big $22,000 or so just under tax bill from that Roth conversion that I'll be covering soon. So we're gonna get a little light in cash. Hopefully I can get that back up to 10%. You know, historically I like it between 5 and 10%, usually closer to 10. Bitcoin is IBIT, and that is 57,000. I like it between 3 and 5%, so we're right there comfortable. Below 3 would be a buy for me with extra money, and above 5 would be a shave long-term capital gains to put into the other things. And then stocks to HODL, I don't have a specified percentage. This is just my YouTube money. That's why when I say I'm a third of each of my core, it's not technically 33.3% each, because we have cash, we have Bitcoin, alternative assets, we have the HODL Factory. So it's just relative to each other. I like them at a third each. And then real quick, I wanted to show our snapshots have been a little brutal lately. So we hit our last portfolio all-time high on 12/6/2024. It's been a little bit here, but that's okay. You can see since then I'm highlighting all these. You can't see this, but we're down about $55,000 total. And it goes up and down. You see some real bad down weeks, and I update this every Friday. Had a couple down ones recently. Ironically, I bought the car, I think, this week, but it was just a great market week to balance it out. So sometimes you never know what you're gonna get. But ultimately, I'm happy where we're at. And to see a zoomed out, take a deep breath and relax version of that, here's my portfolio value by month. So it takes the average portfolio value for each month by year. You can see we have 22, 23, 24, and 25 now. And our purple is looking quite a bit higher than our 2024 green. So we've had some ups and downs and things have been wild, but we've stayed the course and we've increased the portfolio value. Even in the crazy 2022 that was down, it was going down, but you just keep dollar cost averaging in, stick to those target allocations, and eventually it goes up. You know, we might have some more rough times, but I feel comfortable as a buy, hold, and add investor with my system. And then the last tab we'll come over to is the portfolio projection tab. What this does, here's our current portfolio value, and here's our monthly contributions, and that breaks it down. This is a 401k plus a ridiculously juicy match, plus an HSA and a ridiculously juicy match. Thank you, Boeing. And then E-Trade I don't add to right now. Fidelity I put in $200 a week, and that's from cash interest. It's not new money that we're earning. And in One Finance, the HODL Factory, I put in $100 a week, and that's from my YouTube earnings. So all things considered, it's nearly 5K a month. That's quite crazy. And I assume at 8% growth. Again, this is a nominal return, not a real return. So it's about 5% if you include inflation. I do that in a separate module. So I'm conservative here. The 100-year average is 10%. I assume 8%. And my portfolio has been 17 plus, I believe. Okay, and just as a one-time thing here, I'm going to show some analytics and some key metrics about the Snowball, the new fund. So what I've done, and this is the one you have access to, like I'm always saying, this is my shared financial freedom friends. So everyone watching this is free in the link below. And this particular spreadsheet is 13 Snowball stats. There you can see the HODL stats is 9. I update these weekly, so you can always look. What we'll do, this tabulates up from a data tab. It's like a data dump from Seeking Alpha, one of the many amazing things I use Seeking Alpha for. But ultimately, let's just go here. So the idea of the Snowball is not to beat the market, okay? It is not to beat VU, zero intentions. Hopefully it does, but not why I'm here. It is to find an alternative to SCHD, or I should say an addition to add to SCHD of individual stocks that can consistently produce results. And I think I'll actually give the whole magic formula on this one, unlike the HODL, because it's more simple in the way that I do it. So you can see inception was 130. I updated this on 2/7. So, you know, The year to date, the 1 year, and the all are going to be the same. So far, we're just behind SCHD since inception, just over a week. So I'm not too worried about this, but this will continue to be updated. And I do the HODL factory as well, if you're ever curious. But for high level stats, for the 3 and 5 year dividend CAGR, you can see the Snowball is very solid at 15 and 14 respectively. And SCHD is also very good. And then for the yield, SCHD gets the nod, but we're at 2.77. And I think it's actually gone down a little because we've lost money. This is, I update this weekly, but anyway, close enough. I think it's 2.8 something right now. And the payout ratio is a much lower 39% compared to SCHD's 57. That's really good on the Snowball, sustainable dividends. And then it's 3, 5, and 10 year performance with the current holdings, you know, which I didn't have all along, but just for perspective, would have done very well against SCHD. None of this is in the selection process. Net income margin, I care a lot about that, is 17% compared to I don't know for SCHD. VU is 12%, so I'm assuming this is lower. And then the important one, PE ratio. This is sort of your, not the only, but it's a high level value versus growth metric. You want it lower for more value. 17.4 at the time of this update compared to 18.3. So you can see why I consider the Snowball in the value section of my target allocations and not just with the HODL factory. What do we do with all of that cash money? Portfolio contributions. There are a few automated investments that happen on a regular basis. We max my wife's 401k and her HSA every year. This happens every other week when she gets paid. And as many of you know, we also invest my YouTube money, which is about $100 per week, into the HODL factory and M1 Finance. Everything else is done manually by me. I have dividend investments turned off in E-Trade because I like to choose where the money gets reinvested. And here's where that money went last month. So this looks crazy, but don't panic, everyone. We can explain these big numbers here for Mr. Jobless. We'll start with the HODL factory. It got its $100 a week, and there were 4 of them for $400. That's the YouTube money. The Snowball, which was a new one, received $2,000. It was actually on January 31st, its very first day. And so that was just a one-time shot of 2,000, but we're going to see this a couple hundred a week, and there might be a couple other drop-ins early, we'll see. So that came from money market basically. And then this JEPQ right here, 123 shares, was the wife's Roth IRA. We had some left over from the one late last year, and then we bought 123 new shares at the $7,056. You can see it was $57.37 per share. And then SCHD, this was my Roth IRA for 2025. So we dropped in 14,000, and I had some other stuff in the Roth, dividends to reinvest, whatever it was. So we're done with the Roth IRAs. I get those over with in January. So these numbers came from our money market, and that's why we're a little lighter in cash right now. We were at 10, now we're at 9.5. And then I'm able to, because of Snowball Analytics actually, which is pretty cool, I'm able to add my wife's contributions. So you can see the shares I rounded here. In the background, it's the full number, but I ran them just on this pivot table. VIGIX is the HSA, and 1,761 is a lot more than a typical month. You know, the whole year is 85.50, I think, or whatever the max is. But Boeing puts in a nice juicy match in the first month of the year. And then for VU, we actually had 3 contributions. It was one of those 3 paycheck months. So it gets 2.5-ish or right in there per. And we had 3 of them for a total of 4,157. And again, this includes company match. This is every dollar that goes in. This isn't how much we spent. This is the whole 9 yards. At an average cost of the VU of $545. And VIGIX, you can see, is $216.69. Nice. But it's gonna be cool being able to track this year. I historically didn't have that, but Snowball Analytics is a beast. It's a dog. It's a problem. I told you it wasn't all gloom and doom last month. Now, let me show you. Dividends received. 2024 was by far and away our best dividend year on record. And we look forward to smashing those results in 2025. January got off to a promising start. Boom shakalaka. $1,375 of dividends in January of 2025 compared to 2024's $985. And now when we do the drop down here, and you can see I have everything selected, but I'm just choosing to look at January so far. And a CD, you know, that was in 2023. Let's just not even look at 2023. I did things differently with the treasury ladder and none of this will make sense. But apples to apples is right here. So you can see no CDs, of course, in these 2 new years. JEPQ, 634 last year compared to a juicy 785 this year. I like that. And it's all in the Roth. This was all taxable. This is Roth. Paying bills, building wealth. Love it. And then for the M1 mix, you can see we went from 346 to 976. And again, a lot of that's dividend growth, and I'll show this in Snowball in the performance section. It's over 20% growth of the dividends, I believe. But of course, the reason it's tripled is because the contributions. It was new-ish last year or so. So a lot of these did come from contributions, but still we like to see the growth. Here's that E-Trade savings, 46 bucks. And then VMFXX, it looks like we've increased our position this year compared to last year, 347 last year, which was a higher percentage technically as far as the APY. But this year, with the falling rates, we still had 534. So if we collapse January, you can see we're kicking butt so far, and that might be a good trend because last year we did hop up to $35,260 of dividends. Snowball says we're gonna have over 40K. Time will tell. All right, the dividends get me hyped up, but let's make sure this thing's producing quality results. Portfolio performance. This is my first full month of using Snowball Analytics, and it is a fantastic way to track very specific portfolio performance. I do have an affiliate link, much like Seeking Alpha, not a sponsor, if you like what you see in these videos and you want to try it out for free with your portfolio. Make sure you hit up a nice sale, use that link, and it helps support this bum. All right, here we are. We're out on Snowball Analytics, and I'm currently on the Analytics tab. So this might be a little clunky. I'm not used to doing this, but oh, I'm so excited because compared to using Portfolio Visualizer, which is an amazing site to assess funds or asset classes over many years or decades, this will actually show exactly what has happened for me. So I'm going to break this down. I've done some things here to make this viable for what we do here. So on Rip City Teeps right here, I have some portfolios here and we'll get into all this. On Rip City Teeps, we have everything and you can see the numbers very close to the same and the shares will line up and the values will line up. I'm not going to go through all that right now, but just know that I have meticulously put this stuff in. Now I have something tragically sad to share. For my E-Trade, which I've had for many years, when Morgan Stanley bought E-Trade, it lost my history. So it doesn't have my Microsoft, Apple, Tesla, Luckin Coffee, Zoom. Like it dropped a bunch of the things that I made a whole bunch of money on, and more importantly, some of my historical VGT, SCHD combo, and I am beating Boo by $200,000 to $300,000 over the years, and it's just a bummer because this won't reflect that. This is basically just from 21 on, and then I have some of my old holdings that are current that I was able to put in, but it does not show the complete picture. But what it is exactly what we have now. So moving forward, this will be a nice assessment of our performance each month, and it will be pinpoint accurate. So this is as a high level view, including the money market, which I keep separate, and we'll get into why I do that. Our total profits, 453,000. Our internal rate of return is 17.35. This is basically your annualized return for as far as it goes back, and we'll get into the charting here soon. So that's really good. Our passive income, our dividend yield of everything combined is 2.62%, and we have a dividend growth rate. It's kind of cool because instead of the 3-year or the 5-year growth rate, this is what it has actually grown since we've held it, 8.8%. Not a bad weighted average. And you have some, we'll get in maybe in the future of all the IRRs by holding, the total profit, including dividends and capital gains. It's just a much better way to do things than like Fidelity, E-Trade, M1, or even Seeking Alpha when it comes to specific details. So we're going to stay on this high level view of everything, and we're going to check out the dividend tab. So you can see that yield on cost is 3.46, so that's good. It just shows we've appreciated some of our positions. But what I really want to show is the projected dividends based on the current holdings is 40,237 annually, and that's 33.53 a month. So that's not bad with that 8.8% dividend CAGR. So now when we go to growth, I'm actually going to use just my invested. I made a portfolio here that is M1 plus the Snowball plus E-Trade equities and ETFs. It excludes money markets. So we can see how our invested money has actually compared to VU. And you can see I already have this set for last month specifically because that's what we'll be assessing. But this is the value, portfolio value, where we want to live, and we're against VU here. We want to live down here on the portfolio performance. So here you can see we're at 1.87 on the month of January. And if we look at VU, it was at 2.67. So we underperformed VU on the month with between all of our portfolios. And then this is just a different way of looking at the monthly performance. And we'll look at this throughout the year. Right now I'm just on 2025. And you can see that 1.87 for us. And it shows dividends and capital gain. And you can see VU, just as the market, 2.67. Looks like we're losing early on, barely. In February too, so we'll see how that goes. But then one thing I really like is the holdings performance. So just in January, you can see that TPL, and this is in the HODL factory, was up 17%. KLAC was up 17. Let's look for, so IBIT was our big, actually, you know what? For this, I'm gonna do E-Trade only. So in January, IBIT was up 8.8%. It did great, and that's about $60,000 worth. VU, the competition, and one of our big holdings, let's be honest, was up 2.7%. SCHD slightly underperformed. You can see VIGIX and JEPQ were a step below, and then VGT, so tech really hurt us in January. There's our culprit for underperforming. So it's just cool to see by holding and to get the whole clean picture instead of portfolio visualizer, sort of a high level, but it's not actually my holdings. So I switched it out to the HODL factory here, and you can see we've had this one since 4/20/2023. Our values here, our total profits there, our internal rate of return is a solid 21.9%. That's your annualized return, but the market's also been great during that time. And our yield is 1.11% with 21.1% growth. And that's, I'm really happy with that. That was one of our objectives, Hutch and I, was to consistently grow dividends regardless of what the starting yield is, because this will double every 72 divided by 21.1. That many years is how long it takes to double. That's not a lot of years. And I'll just give you a quick HODL factory update like we normally do in the separate videos. If we come down here, we were ahead of VU, as you just probably saw. You can see in January, we were up 3.92% to VU's 2.66. That gives me a nice little warm and fuzzy. When we hit compare right here, you can see so far in Feb, we're just barely losing, but January is where we're at in this video, that 3.92 to 2.66. That's fun. We like winning. And then the culprits, you can see TPL, KLAC, PH, Visa, MPWR, and I won't read them all, but you can see our performers here. Okay, and then now I've gone to the Snowball. It's way too new to assess. Let's just be honest. But I wanted to show it is a 2.91% yield. So the market went down a little. That's why that went up. Our yield on cost is actually upside down, which is kind of funny. We're down overall. But you can see so far our dividend growth is 12.8%, which isn't bad, but it's so new. You saw the 5-year and the 3-year CAGR are both higher than that. So I'm hoping to get this to 14 to 15% while keeping the yield steady and hopefully outperforming SCHD. But I think that's enough for this month's video. 1 month in the books and I'm feeling pretty good. But what's next? 2025 and beyond. I look forward to practicing what I preach all the time on this channel and what I've done historically by staying the course with the portfolio this year. I was able to stick to my core portfolio of SCHD, VGT, and VU for many years before I started this YouTube channel. But things got a little strange after my major life change. For example, I've always had the intentions of holding something like JEPQ in retirement in my Roth IRA, but not before then. But when we lost well over half of our income overnight, JEPQ was the perfect holding in the taxable account to help pay the bills. Then I changed it over to QQQM once we settled into the new life flow. I wanted the qualified dividends and the better long-term wealth accumulation. But shortly after that, we had another happening. I made the decision to make a Roth IRA conversion for the first time ever as we decided to retire within a 10-year window. And the point of all this is that I've been all over the map lately for Mr. Stay the Course, like the one that my friends call the robot, me. But it's not random, it's just been big life happenings. If you're in the accumulation phase during your career, Set those target allocations and stay the course in all markets. It really is the best way to amass wealth over many years, and it's exactly what I did. Thanks for going the distance with me. Seriously, how are you awake at this point? You are the real one. Check out one of these 2 videos if you want to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you here in the next one. Peace.